Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Sacramento, she's selling Sacramento, she's selling Sacramento, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Selling Sacramento, she's selling Sacramento, she's selling Sacramento, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, selling Sacramento. Oh yeah, oh yeah. Selling Sacramento, she's selling Sacramento, she's selling Sacramento, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Sacramento. She's selling Sacramento. She's selling Sacramento. Oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Agent Key, yeah, selling Sacramento. She's selling Sacramento. Agent Key, she's selling Sacramento. Oh yeah, oh yeah. Sacramento. She's selling Sacramento. She's selling Sacramento. Oh yeah. Agent Key.
There you are.
Hey.
I don't know. She's gone again.
Girl, no, I was right here just trying to get my whole situation together.
All right, I'm going to turn you up here. Hey, you guys, if y'all are watching, make sure you comment. Let us know you're there.
5,
4,
3.
We're about to go live. Hey, Sacramento. It is Wednesday. You're listening to 97.5 FM KDEE. I am Agent Key, and we are selling Sacramento. And on the show today, Last week, I started a segment about home buying options that work and some that don't. So last week, we talked about those that didn't work. This week and for the next 3 weeks, we are going to be talking to four of my lender partners who are going to, in great detail, talk to you about loan buying options that actually work. And this segment was triggered because of a Facebook post that an agent made. And actually, it wasn't a post. I posted a screenshot of the text conversation or email conversation, rather, from the agent. And I shared it on my Facebook page because I wanted to show how misinformation is out there and how misinformation is in the hands of some very important and crucial pieces of the home buying process. The listing agents, agents who represent sellers, I call them gatekeepers. They're gatekeepers because they play a big role in helping determine whether or not your offer gets accepted. How they communicate the contents of your offer to their sellers, to their clients, will either be in favor of your offer or not. So it's imperative that listing agents know about loan programs. It's imperative that all agents know about the different loan programs, that they're not just representing or emphasizing or rooting for the loan programs or the finance options that they are familiar with. And so I want to take a moment and read what this agent said. So this is an email that was in response to an offer sent by one of the agents that I coached. And when she got the agent's response, she sent it to me and she said, "How should I reply to this?" And her reason for asking that, you'll find out after I read this to you. So the listing agent's response for her offer was this: "Good morning, so and so. This is an FHA loan, and typically FHA loans take up to 47 days to close. I know you mentioned to me that you could close escrow in 21 days. Please explain how this can close within that period of time. I need to explain this to my sellers." So the agent who shared it with me was a little baffled, and I was concerned and baffled that this agent, who also has a lot of credentials after her name, this listing agent who replied like this, first of all said that she said it typically takes FHA loans 47 days to close. Now, as I'm talking about this with you all, I want to let you in on who my first guest is for segment one of our 4-segment series. Session one of our 4-session series in this segment. Miss Tanisha Broadway, and you all have heard her on the show before. I call her the down payment assistance queen. Miss Tanisha, say hello to everyone.
Hello, everyone. Happy Wednesday.
And so Tanisha is privy to this post because she chimed in when I shared it on my page. And so as I'm talking about this, and this agent says FHA loans typically take 47 days. And then she says, "I know you mentioned it can close in 21. Explain to me how that's going to happen. Explain to me so I can tell that to my sellers." I was glad that she said, explain to me so that I can at least share it with my sellers, versus number one, she could have just not responded at all.
Right.
But at least she did respond. But number two, she could have just said, yeah, we're not going to take FHA loans, and not even bothered to ask about it.
Right.
So what strikes you, Tanisha, about her response immediately?
When you posted this, I was like, oh God, where are we living? What age are we living in? First of all. And my mind immediately went to, this is just the most blatant level of discrimination that I've seen a while written about a loan. Because she's going in with the notion that FHA buyers, and this is a whole, I could lay out so much about the predominant race that is getting FHA loans, right? So saying that this is taking so long, this product was taking so long, which is completely false, is attaching itself to like a group of people. Right. And right then and there, I was so turned off. Like, really? Yeah. So just for those out there
let's break that down, what you just said, because
yes, please.
You said it, but you didn't say it. But
I didn't say it, but I said it. Yes.
I'm going to help you say it.
Okay.
FHA loans for the Black home buyer. There are a lot of Black home buyers who use FHA loans, number one, because they're tied to down payment assistance, which historically African Americans have a difficult time saving in that area, right?
Absolutely.
And so you can indirectly discriminate without discriminating against Blacks by just saying this particular product that Black people use, and you don't even have to say that. Just because wherever we are in numbers,
yes,
if you discriminate in that area, or we won't even use the word discriminate, if you have a lawful and legal argument as to why something else is a better alternative, you are indirectly discriminating.
Yep.
And so for this agent to say that typically FHA loans take 47 days, that means that is her thought process. That is her understanding from somewhere, right?
Mm-hmm.
What are your thoughts about that?
It's absolutely her understanding from somewhere. So I assume that at some point in time, she may have had a long FHA transaction, but which again is fine. We all have had our experiences, but just to kind of single out that particular type of loan because of one experience is really unfair and really sad for people who are great buyers, great candidates, but just for whatever reason have to go with FHA financing. It's really sad.
Well, let's provide some clarity for her. In the event she's listening today, let's provide some proper education for her. What would you tell her?
I would say that regardless if you're FHA, conventional, USDA, whatever the type of loan product it is, the timeline from when the time the loan starts to it finishes has a lot to do with the loan officer, the person that you're working with, the bank, their process. It has nothing to do with the type of program. In my experience, and from what I do in my business, I'm closing FHA loans, conventional loans, USDA loans, all around the same amount of time. 21 days, sometimes even 17 days. Okay. 47 days isn't happening. I don't know where she got that from, but it's not even kind of happening, period. So
it's not even remotely close. 47.
Not even remotely close.
She said 45. That's not even close.
No.
And so, and it hurts me. It hurts my heart. And I say it hurts my heart, and I'm getting kind of sensitive about it when I say that, because again, she's a gatekeeper.
Yep.
And so she heard that from somewhere. She's a listing agent. We all know that listing agents, 80% of them, 20% of them, let me back up, 20% of them have 80% of the business, that they're out there listing homes on a regular basis. And so in the sad event that she is one of the 20%, how many other times has she shunned an FHA buyer offer because she had a misunderstanding about the process time? Had this other agent not produced a narrative when she sent in her offer, maybe she wouldn't even have asked her, oh, you say you can close in 21 days. Tell me how that's going to happen. What if she hadn't prompted her to say that?
Right.
So it's really a tough, arena to maneuver in, because it's hard to say somebody's being racist. You don't want to say someone's being racist. You wish these things really weren't out there. But the sad reality is that they're actually constructed in the foundation.
Yep.
right?
Yep.
And so
And
go ahead.
I was just gonna say, and I, to be honest with you, I do come across not the timeline, but there is this kind of, I don't know, preconceived notion that government financing it just takes longer, and it could go, someone could make an argument that maybe, so just for those out there who kind of have no idea about what I'm talking about, so when you buy a home, right, there's financing, you have FHA, you have conventional, or you have government, you have conventional. So let's say you're going FHA, right? So the type of appraisal that's being done on that property is going to be different than a conventional appraisal. And sometimes that FHA appraisal may call out more things than going the conventional route because it is a government type loan. And that process in the appraisal could take a bit longer because maybe there's some things that the appraiser has called out, which is just a case by case situation. And again, has nothing to do with the strength of the buyer or the FHA itself. It just is that particular property may have some extra things going on with it. So I just put that out there.
Well, and then along that line too, and thank you for that, because then that also brings up that the requirements or the bar, the standard for the property is a little bit higher for FHA borrowers, for USDA, right, for the government loans, because the government wants to make sure that the borrower is getting into a home that is, that meets proper health and safety circumstances.
Yep.
And sometimes that will, like you said, extend the timeline just to make sure it's okay, but not to the degree where it separates. So what would you say to sellers who are going to list their home or who have listed their homes and they get these offers and they're FHA? What is your advice to sellers?
Absolutely. So first of all, please, sellers, be open-minded. Understand that in this market, in reality, FHA timeline and a regular conventional timeline, it shouldn't be different at all. Okay. At the end of the day, someone that's going FHA or conventional has to be qualified to buy the home, right? I hope people aren't out there putting offers in houses and haven't got pre-qualified completely, right? So that's the due diligence of your loan officer, by the way, and the partnership with that agent and that loan officer. I would say that don't discriminate, don't assume that it's going to take longer just because maybe you've heard it traditionally, it could take longer. Be open-minded about that. I would say if Mr. Seller, that your property may have some issues, right? That's a conversation you got to have with your agent. But if there's maybe some things going on that you may not want to deal with, you just kind of want to sell it as is, then maybe up front, you as a consumer understand that, hey, maybe FHA may not be the best type of financing for my property because I know I have all this going on. That would be the only situation where you should really specify. But if it's a regular, nothing's going on, then you shouldn't feel, that you're going to be missing out if you accept FHA finance borrowers.
Because in reality, they're actually increasing their potential pool of buyers by being open to FHA buyers.
Yes.
Because there are FHA buyers who get an FHA loan not because they have to and like it's some bad thing, but because it provides better terms for them financially.
Absolutely. And in a lot of situations, buyers can qualify for more house going FHA. And in a market like we're in right now, every dollar counts. So if you can go FHA, right, or if you can qualify for home loan financing and you can go conventional, you may also want to look into FHA because there are some benefits there too that are different than going conventional financing.
That's a great point, that they could qualify for more house, because then also if you have more money in your pocket, then you've also got more money to throw at that appraisal gap issue or to increase the offer. That is all great. We're going to take a break, but when we come back, we're going to talk about the elephant in the room, y'all, that Forgivable Equity Builder Loan, the 10% Forgivable Equity Builder Loan that you've been hearing about. If you're a buyer, we're going to talk about what that looks like, who really qualifies, and we're going to pull back the layers on that puppy a little bit more so that we can get you the information that you need to know. This show is all about equipping you so that you have a very clear understanding of how to use what's out there and to know what's out there that's going to benefit you. You're listening to 97.5 FM KDEE. I am Agent Kia. We'll be right back. Hey, y'all. Miss Sade, I see you, dear. Good afternoon, sister. Good afternoon,
Hi.
Carmen. Carmen said,
Hi,
hi,
Carmen.
Tanisha. Hey,
Hi.
Miss Ange. She said, yes. You're saying, and you said yes to something. Tell me what you said yes to. I missed it. You know me, I'm all delayed on checking out the communication. So when we come back from the break, I'm going to talk a little bit, just give a little paragraph about the forgivable equity.
Hmm.
And then I want you to go into what you know about it, and then we're going to break it down
Yeah.
because there have been the first thing. I'm going to say this again when we come back
Yes.
on the
Yes.
show, but the first thing that I did when I saw it was try to develop a profile. Who is the buyer
Yes.
that this is going to benefit? And
Absolutely.
what I concluded, I was like, holy crap, we're going to be limited. That 80% income barrier.
Yes. Yes. There is
So
a demographic attached to that
I want
in
you
my
to
research.
know we
Yeah.
need to be very transparent about that
Yes. Yes.
because I think there are a lot of people out there who think that they can use this and they actually can't
Right.
because of that whole
Yeah.
salary median income thing.
Yeah.
Yeah.
Yes.
So
Yes.
when we come back from the break, we're going to dive into that. And
Okay.
then I'm going to go into the lender questions that I told you about. And if
Yes.
we have time, I'm going to share with everyone 5 things that student loan borrowers shouldn't do between now and September, because I know that
Mm.
those student loans are one of the biggest stumbling blocks for a lot of borrowers trying to get a
Absolutely.
home loan. And so this is information that might be very helpful. Are you seeing um, people trying to get qualified with their student loans and
Absolutely.
mhm.
Every
Because
day. I mean,
yeah.
it's still a challenge. It's gotten a little better because they changed the guideline, but it's still tough. Yeah,
Now,
it's
when
still
you
a
say it's
challenge.
gotten a little challenging because they changed the timeline, and I'm going to ask you this
Yeah,
again on the
yeah.
show, but what do you mean by that?
Well, it's still challenging, but I'm saying it got a little better because at
Oh,
first,
a
right,
little
they had
better.
we had to
Okay.
take 1% of the total payment. I mean, of the
And
total balance,
now,
right? It's 0.5%, so it's half of
oh,
that. Yeah, so it's definitely helping,
oh,
but
wow.
yeah. So like I had some people that couldn't even look into it because they were like 100 grand, 150 grand in student loan
Ooh,
debt, and then 1% of that's like a mortgage payment, right? So now at 0.5%, it's still hefty. And it's a nice car. It's a Tesla payment or something like that. Okay. But it's
we're
much
going back
better.
to the break. Don't forget what you just said because we're going to talk
Okay.
about. Hey, everyone, we're back. You're listening to 97.5 FM KDEE. I am Agent Key, and with me today, my special guest, Miss Tanisha Broadway of Element Mortgage.
Hey.
Hello.
Hello, hello.
And we are talking about home loans that actually work. Last week, we talked about some home loan buying options that don't work. And this week, we are going to talk about home loans that actually do work. We're going to address the elephant in the room, but I want to remind you that this is series or episode 1 of a 4-part segment of home loans that actually work. I'm going to have on each Wednesday from now through June 8th, one of my lender partners who's going to come and talk about the different home loan products that they are using most often, that are working, that they're seeing their clients use. And each lending institution, if you didn't know, has their own in-house home buyer program. And so we're going to make sure that we hear from them on that in that regard as well, so that you know all of the tools available to you. This is a show where you get that kind of information, right? So now, the elephant in the room is the Forgivable Equity Builder Loan. If you've not heard of it, it is a new down payment and closing cost program for buyers I think it's only 2 weeks. It might be 2 weeks new, less than
Couple
2
weeks, couple weeks.
couple weeks.
Mm-hmm.
The governor introduced it a couple of weeks ago, and everybody's jumping on the gravy train about it. And the Forgivable Equity Builder Loan, it gives first-time buyers a head start with immediate equity in their home loan. That's the concept,
Mm-hmm.
with a loan of up to 10% of the purchase price of the home. The loan is forgivable if the borrower continuously occupies the home as their primary residence for 5 years. It's it's a forgivable subordinate loan program that may only be used with a CalFHA first mortgage. Is that correct, Ms. Tanisha?
That is correct.
And you take it away. Tell us the rest. What do we need to know about this?
Oh, where do I even start?
Well,
So
start
first
with
of all,
eligibility. Who's eligible?
okay. So in order to be eligible for this program, the same guidelines would apply for just the traditional CalHFA. So let me explain. Minimum credit score you can get in with is a 640. That's going FHA financing. Okay.
Mm-hmm.
And the unique thing about CalHFA, just in case you guys don't know, regardless if you have a 640 or a 800, the rate and how the program works all the same. So it's really exciting because if you can get in, you can barely get in at that 640, you're still there. You're still getting the same interest rate as someone that has a 800 credit score using the same program. So that's one of the things that I really love about CalHFA.
Right.
Video went away. I was like, hold on.
I'm just coming back in.
Okay. So that's the exciting part about it.
So what are the borrower requirements?
Yeah, this is the biggest thing with the Equity Builder program is going to be the income. There are income restrictions. Now, most of these programs have some sort of income restriction anyway, but for the Equity Builder program, it is quite conservative. So someone's income would have to be at the 80% area median income for that county. So we're in Sacramento right now. So that's 72,720 for Sacramento County. Right. So you can't make more than that. That's your gross. Okay. And so, yeah, I mean, with that amount of income, is that going to limit?
Can we do the math on that? 72,720 is the most that you can make.
Yes.
And so with someone who is 72,720, how much house are we talking about?
This is a great question.
I'm
getting this every single day now. And by the way, it's been wild because how enticing is 10%, right, to be used for your closing costs and your down payment? That's going to cover everything. You're not going to have to come out of your pocket any money. But yeah, it is going to limit how much house. So what I've been seeing, now this is all going to be based on your individual debt to income ratio scenario, right? Because whatever other bills you're paying on every month is going to be factored into how much house you can qualify for. So there's going to be
the debt to income max is 45%, right?
It is 45%. So it's also very conservative in that area. In the beginning, remember I mentioned FHA financing. Sometimes you can qualify for more house. You can. But when it comes to FHA financing with the Equity Builder and conventional, the guidelines are the same with the debt to income ratio, no more than 45%. Okay. So I've seen someone qualify for a $300,000 house. And then I've seen it as high so far at about a 390. Okay. Now rates adjust daily. And so those rates are going to adjust how much house you can qualify for too. But that's about what I've been seeing.
Okay. So you just laid it out there. And I thank you that your numbers are coming back the same as mine, because I got as an average, the max house on average is about 380, 375, 380. So now let's just take that purchase price amount and we cast a net in Sacramento County with 380 as the maximum purchase price. And I actually did that a couple days ago, and I got back 46 properties. Minimum 3-bedroom, minimum 2-bathroom, Sacramento County. I got back 46 properties. When I went and looked into each of those properties, click on them and look and see, well, what's going on? You know what I found? A
What'd you say?
majority of those homes had people who had lived in them for years. First of all, they weren't move-in ready, which we don't really care about that because it's a house. And as a first-time home buyer, you just want to get your foot in the door.
Absolutely.
But it's a challenge when the house is occupied by someone who has lived there for a long time, or there is some kind of an issue with the person who's occupying the property. And unfortunately, that's what I saw. And when I say it's difficult when there's someone who's owned the property for a long time, is because a lot of those properties in the pictures, you could see they had tons and tons and tons of stuff in the house, every room from the floor to the ceiling.
Right.
When I prepare my sellers to list their home, the very first thing we talk about is what's your next move when this escrow closes? Where are you going to be? You've got to get your mindset there. You've got to divorce this house and get ready to go, because the person who buys this house is going to want to get in it right after escrow closes.
Right.
Who are these agents that are not having these conversations with these owners who are putting these homes on the market that are going to take literally 3 to 6 months to declutter and to empty out?
Right.
So you have a home that's compacted with 15, 20, 30 years of stuff. You put it on the market, you get into escrow, that person closes in 30 days, or like you said, 21 days.
Absolutely. Yep.
They close in 21 days. How fast you going to be out of there?
Right.
You're not. And so I'm bringing this up because I did the math. I walked it through. I don't want to present this option to my clients like it's some kind of a rescue plan.
Right.
If the governor came out and made it seem that way, gave it that appearance. I would like to think that they included some lenders on this discussion when they came up with these numbers. But I'm almost afraid to say, just looking at the numbers, and as soon as you put in that 80% of the median income,
it's real limited.
That's like a government tool. They throw in 80%, and that immediately kills the program. So now we're down to this house where, and it's some person who probably doesn't even have anywhere else to go, really. And that may be the reason why the agent can't get them out. They don't have the money to get stuff out of the property. They don't have the help to help them get stuff out of the property. They don't even really know where they're going to go once the house sells. They're really relying on that money, the sale from the sale of the home, to get them to the next step. So now you've got sellers who need assistance to make these types of transactions happen. If we're talking about the 46 properties that I pulled up that are the only eligible properties for this program, if we're talking about Sacramento County.
Right.
Now, this program is supposed to be for the entire state of California. And you and I both know that housing prices differ. They vary from county to county. They vary from neighborhood to neighborhood. So, and I don't mean to put you on the spot, but if we look at it from that perspective, how do we talk to the buyers about how to utilize this program?
Absolutely. And so this is the conversation that I have a lot of time, like mainly, I would say most of the time, because it is going to have to do with the price point, and it's going to have to do with the realization of how much money you can buy, how much house you can buy with your money. That's the first most important conversation, is getting in the mindset of how much money how much house you can buy for your money. And then also at the same time, it's that, and it's simultaneously, this is not your end all dream all. This is not the only home that I'm going to buy, right? We teach building generational wealth through home ownership. And it always is going to start with that first piece of property. So I tell my buyers all the time, look at this first property that may not be the most desirable with all the bells and whistles as a stepping stone, right? To get you to where you really want to be. That piece of property that you own, that's building equity. So this equity builder program, right, they're giving you 10%. And yes, it's not this magic thing, right? But what it is doing, it is providing all the funds you would need to buy a home. So let's just say that, okay? So also too, what it's doing is 10% is more than enough to cover the down payment and the closing costs. So where does that excess money go? People ask me, can I get that back, or how does that work? Well, what happens is that the excess money gets put towards the principal balance. So that's how you're building equity already, because you're putting more down than the minimum required.
Right.
And so that's the exciting part about the program. So again, it's definitely not for everyone, and it definitely is a small group of people. And it wouldn't be awesome if they could somehow adjust right there, medium income. But this is what they have for now. And I just closed one. Matter of fact, my borrower closed yesterday.
Well, yay!
He's been living in this home for 20 years.
Wow.
Okay? Him and his wife renting it. Now, they didn't pay off that mortgage already.
Yeah.
Okay. But the seller decided to sell it to him for a discounted rate, and which they loved. And so he was going in this fully thinking he's gonna have to come out of his pockets all this kind of money. This was a for sale by owner. There was no agent involved whatsoever.
Wow.
So I'm playing middleman. Okay, so it was interesting. But he ended up getting the equity builder loan. There was an excess of about $3,500 that went towards the principal balance. He is the most ecstatic he could be. And it's a blessing. So when I have those types of stories, I'm like, this is what I do. This is why I do what I do. This is why these programs are available for that person who can get it.
Yes, I appreciate that. And I'm so happy for your buyer. Yeah. And it just goes to show too, that how that happened was in an unconventional method.
Correct.
Right?
Yes.
You said he was already in the home, and it was a for sale by owner. There were no agents involved. And so you said something else that was very key also. Wouldn't it be great if they could create programs that actually serve more people?
Right.
So like, who are they trying to, it's almost like they put the cart before the horse. They didn't create this program with the end in mind. It's like they created the program with something else in mind that none of us have any idea. It's like, well, wait a minute, we get excited. Yay, oh my gosh, 10%. Holy crap. Let's go buy the house.
Yes.
And then you're like, wait a minute. First, I don't even qualify because 80% of the median income, well, dang, that knocks out no, out of all of the buyers who I am working with, none of them qualify for this equity builder program. None. Just because of the income situation.
Yep.
And actually, so I take that back. The one who would qualify, the price point would be so low. Right. They'd have to be looking up in Humboldt County for a house.
Right.
And I don't service that area.
And that, and that brings me back to the point that I kind of strayed a little bit away from the question you had asked about. So, all right, this program, this initial house, not your end all dream all house, but the house that's going to get you to the next level of house, right? Because the point I wanted to make was, okay, so part of the guidelines is you have to, live there, right, for 5 years, and then the money's forgiven. Okay. Yeah. So with traditional CalHFA, like the My Home and Zip program, which I do most of the time anyway, 95% of my business is that, it's not a forgivable loan, but it's still funds that are used for your down payment and closing costs that you would have to pay back if you were to ever sell the home or refinance, right? But the deal is, let's say you got this house that's not your bells and whistles house, but you're able to use the equity program to get into it, right? And let's say a year from now, you've accrued enough equity to pay off that equity builder loan, and maybe it's now time for you to buy that next level of house, or maybe it's year two that you do that, right? So yes, the features of it are exciting. It's forgivable after 5 years. Okay, that's fine.
If you can get in it,
right?
Awesome.
But what if
let's go back to the if you can get in it. Let's just highlight that, because somebody listening actually can.
Right.
So what's the salary? What's the salary that they can make? The max salary, if they're listening, what's that magic number?
$72,720 in Sacramento County.
So if they make no more than.
Correct.
then they can possibly qualify. And I say possibly because you got to check some other stuff, but we're just
Correct.
like generalizing, right?
Got to make sure the credit's there.
Credit score
Got to
is
be a first-time home buyer. Right.
640 credit score, first-time home buyer. So somebody listening and watching right now, this is you. Yeah. This is that magic bullet. When you see people getting excited as they're talking about this forgivable equity builder loan, this is like having all of the numbers in the lottery.
Correct.
If all of these numbers line up for you, you better get Tanisha a call. Tanisha,
you better give me a call. Okay.
Somebody actually asked in the chat, they said they wanted to set up an appointment. How do they reach out to you?
Absolutely. So the best way I would say right now is you can text me just because I'm talking, and my number is
she's saying right now at this moment. She's not saying like in a few months she's gonna be gone. Just right now.
So right now, you could text me, so you can reach me at area code 916-671-6299. Again, that's 916-671-6299. Or you can go to my website right now, which is TanishaBroadway.com. And you can click on either to schedule a calendar appointment with me. You can literally apply and put in your information just to kind of start that process, and I'll call you and then we can go over the game plan just so you can have your information in there. But I'm available, you guys. Like, I'm working around the clock. I get a lot of calls, just a lot of questions about it because I am the CalHFA preferred lender. And so I'm just kind of filtering through this because it is exciting. But again, like we're talking about, it is for a very certain buyer in a very small box.
Small box buyer. Now let's talk about loan programs that you use on a regular basis that work, that would apply to the majority of our listeners who are listening and considering home ownership, and who might be first-time home buyers, and who are probably looking for down payment assistance and closing costs. What you got for them?
So I would definitely refer back to CalHFA again. Like I mentioned, the CalHFA program, the Equity Builder is the new option, but what we've been doing for years is the CalHFA My Home and the ZIP program. So that combination will provide all of your down payment, and in some situations up to 3% in closing costs. So that could be with an FHA loan, 6.5% in assistance, which would cover a huge majority of the funds you would need to close on a loan. So I tell my clients, minimally, let's say you are eligible for the CalHFA My Home and ZIP programs, which do also require a minimum credit score of 640. But the minimum amount of out of pocket, just kind of depending on your purchase price, could be on the low end of about $5,000 to get the ball going, to $8,000. That's kind of like the average minimal amount of money out of pocket. Any more than that would be great, because the program, just to kind of give you a quick little about it, the more assistance you want to use for the to buy your home, the higher the interest rate is going to be with that assistance. Okay, which is ultimately going to affect your payment, which is going to affect how much house you can qualify for. So it's my job to help kind of navigate those different scenarios for you to figure out what's going to make the most sense for your situation. Do you have a good chunk of savings already, but you just need a little bit more to get you to that next level, or is the savings really limited? And you're like, Tanisha, I understand my payment's going to be higher, but I'm willing to take this loan today to get my foot in the door to that first property, like we talked about, right? Mm-hmm. And then you pay your mortgage every month, and you're building sweat equity, and your home's appreciating, and then you get out of that loan, right? We refinance you into a traditional program maybe a year or two later, or you sell and you get something else. So these loans are designed to get your foot in the door. So the CalHFA programs are my go-to, whether it's the Equity Builder or the My Home and the ZIP. That's my bread and butter. But then there's also other programs that I have in my arsenal too. There's some grants, right? So like GSFA and the Golden State Finance Authority, they have a grant program. And they also have a lien option too with the Open Doors program. But right now, I haven't been using those because the interest rates attached to them right now are pretty high for the amount of assistance that's available. So, I mean, they're there, but it's, for a small person as far as their or group of people, I should say. And with the GSFA Open Doors program, you can buy a duplex. I get that question too, just as I'm thinking of some things. What down payment assistance program can I use to buy, a multi-unit, it would be the Open Doors program. But again, for FHA financing for Open Doors right now, the rates are too high and it's unavailable. So they're only providing options for conventional as of today. This varies every day right now in this market that we're in. So these programs are kind of adjusting here and there, but the CalHFA, they've been pretty standard, pretty consistent, and it's my go-to. Minimum credit score again is a 640. So
I like that you point out the fact that the information changes on a regular basis.
Yeah.
And so it's very important that if they want to know what the most current interest rates are on the different programs, what the guidelines are, that they speak with you directly.
Yes.
Right. And so I do have another question for you. Actually, I have a few questions for you. Can
Sure.
we do? I'm going to give you one question, then we're going to take a break, come back, try to squeeze in another one. I did say I wanted to talk about the, where's my information? 5 things that student loan borrowers should not be doing between now and September. So maybe if I can squeeze that in when we come back from the break. But for right now, so you talk to us about the loan programs that you're finding that are working for your buyers. And we talked about the Forgivable Equity Builder Loan. I want to ask you this question. There are a lot of people now who are self-employed. Over the past few years, COVID has kind of pushed a lot of people into that. If I'm self-employed, how do I show the lender that I can afford to make regular mortgage payments? Is it harder for self-employed individuals to purchase a home?
That's a great question. And I get this one all the time too, especially now because during the pandemic, right, a lot of people were looking to make some extra money. So it was DoorDash, it was Uber, all that, right? And a lot of people made a lot of money doing that, which is great. But then the question is like, well, how can I use that to qualify? Because I'm technically self-employed. If you're 1099 or if you're a W-2, 1099 or Schedule C, it's all kind of calculated the same. So let's say you did have that side hustle, or you just are a self-employed buyer and you're looking to buy a home. You're not looked upon any differently at all. But what's calculated is just how much money you make is very specific. So what I need from you is tax returns. That's the biggest thing. So like you got to file taxes on that money. And you got to have a 2-year history of filing taxes on that money. So if you started doing what DoorDash when the pandemic hit, then is that 2 years? Was that in 2020? Was that 19? It's 2 years. Okay. Oh gosh, it's been 2 years since we've been dealing with this. Lord. Anyway,
no time to get a degree. Go ahead.
Seriously. So if you have 2 years tax returns from doing the self-employed business, your new hustle, your new career, great. Then it's a 24-month average that we use. There's a formula that we use to figure out what that number is. And a lot of times, and as self-employed buyers, I want to tell you this real quick too, since we're talking about it. Accountants, CPAs, they're awesome. We all, it's a great business, and their job is to make sure you as a business owner look good on paper, right? And a lot of times they're there to get you the most savings as you can, because it's tough being a business owner. Absolutely. And you need every break you can get, right? But what I found a lot of times is some of those accountants are not preparing you for kind of the home ownership process, because the way that we calculate your income can definitely will affect you tremendously if your accountant is trying to help you save some money, because that means you're writing off a bunch of stuff typically, right? And when I see your income, that number that you bring home, that paycheck, right, is probably not going to be the same than what I'm going to calculate.
So what you're saying is that if someone is self-employed, if I'm self-employed and I see a house in my future, I want to show more income on my tax return than deductions.
Absolutely.
Because the less money you see when my tax returns get in front of you, the less I'm going to qualify.
Absolutely.
When it comes to getting ready to buy a home.
Yeah. And in some situations, I can use 1 year of tax returns. It's like a rare case by case, but 98% of the time I need 2 years tax returns. So if you're listening and you've just started a business, well, now you can kind of prepare. Let's say you do have your 2 years, and maybe you're like, you know what, I can go back and maybe amend my taxes and get it to a better position. Do that now. You have flexibility. You're gonna pay a little bit, but hey, what's paying a little bit if it now sets you up for home ownership, right? So yeah, it's a great question, Key. That's what they would need to do.
That is awesome. I know that there are a lot of people out there that are running their own businesses, so I felt that was really important to ask you. We're going to take a break, and I just got a message in the chat that said, yes, please state those 5 things. What did Ange say? Please squeeze in the 5 things. So we're going to come back with that. I'm going to rattle that off real quick when we come back from the break. We're going to close out with one more question from Tanisha. You're listening to 97.5 FM KDEE. I am Agent Key, and we'll be right back. The time flies so fast.
Girl.
Petition for another half hour to be added. We're taking in increments.
So fast.
Can I just get another half hour, 2 hours?
Jeez.
There's so much to talk about, and then trying to squeeze it all in. I didn't realize how I thought an hour was going to be plenty of time. I think
so late. It never is.
Letting me wet my feet. Now,
exactly.
For another hour.
Yeah, you have that much, info. Maybe you should do the half hour.
An hour and a half.
Yeah.
So from 1 to 2:30, and see, because then if I just throw in a whole nother hour, I'll be like,
yeah, especially on the days when you don't have like a guest.
Well, I can be a chatty Cathy on autopilot if necessary, but do people want to hear me talk? That's the thing. Like,
I would say,
she ain't saying nothing.
I always worry about people that have my birthday, you'll be amazed now.
Yeah.
So some days you be like, ooh,
gosh.
What we got there? Okay.
Tanisha, so I'm going to give you the question that I'm going to ask you when we come back from the break, so you have a second to think about it. Yes, sir. Yes.
On your own.
No, I'm not on the phone. I thought you were sending. Look, I'm looking through these reading glasses.
So did you look at your phone?
You sent me a message?
Yeah.
No, I did not look at the phone. Oh, yes, I thought you already asked me to do that.
Okay, so we're just confirming.
Oh, yeah. Yes, the answer is yes. Okay. So of these 2 questions, which one should I have her answer, y'all? How do I find a good lender, and what are some questions I should ask before agreeing to work with the lender? Or I have student loans, and will that be taken into account when I apply for a loan? Which question should I guess the student loan question, because then that would dovetail right into the 5 things, right? Did somebody just say yep? Somebody back there said yep.
I have a great way of answering both of those questions at the same time.
Student loan. Okay. We'll do the student loan questions. So I'll come back with the 5 things. I'll shoot those up, and then we'll let you answer that. And then that's how we'll close out.
Cool.
Is that perfect timing? Are we going to come back?
Yeah, about 15 seconds.
Okay. Yeah, I'm going to just highlight these real quick. So then we have, we're at 149. Okay, so I'm going to rattle real fast. Okay. Oh, I had that moved so I could see the chat.
5.
Oh, Ange said, yep, she did too.
2.
Okay.
5.
Hey, everyone, we're back. We are at the end of the hour, and so we're going to close out with some student loan finance questions and answers for you. So Forbes.com personal finance contributor Adam Minsky, he is an attorney focused on helping student loan borrowers. And he wrote a piece that I thought was very timely for right now. If you are a student loan borrower, you see all the things that are happening, and Biden is bent on forgiving student loan debt. He's been getting rid of it left and right. And so, yay, right? So here are 5 things that you shouldn't do between now and September, according to Adam. He said that it's a bit of an odd time to be a student loan borrower. Payments and interest for many federal student loans have been paused for over 2 years. Yay! Meanwhile, the student loan system is undergoing significant upheaval as loan servicers change, and the Biden administration has temporarily changed the rules for existing student loan forgiveness programs while also reportedly considering broader loan cancellation. Yay! In this time of unprecedented uncertainties, there are some actions student loan borrowers may not want to take, at least for now. And here it is. Number one, do not pay off your federal student loans before September. Would seem like, but some people might just feel so compelled. He's saying now is not the best time to do that. Government held student loans are still covered by the ongoing relief program by the CARES Act, and that's paused payments and suspended interest accrual since March of 2020. So the other thing, don't refinance your federal student loans before September. A big reason to refinance them is to get a lower rate, but under the federal current law, the only way to refinance a student loan is through a private lender. Borrowers who refinance through a private lender would be permanently walking away from the consumer protections and program benefits of the federal student loan program, including the possibility of loan debt forgiveness. Interest rates are at 0% until September. You're not going to get a better rate than 0% by trying to shop and change. Number three, don't pay your student loans during the payment pause. If you're covered, you don't need to make the payments. Voluntary payments are allowed, but since there's no interest accruing, any payments made during that suspension period will go further towards paying off your loan balance. However, given that there's a lack of interest accrual, there's no real difference between making a regular payment each month and waiting until the end of the payment pause period. Number four, don't ignore your student loan account. While it might be easy to ignore your student loans if they're covered by the ongoing payment pause, it might be a mistake because a lot has changed. Loan servicers are exiting the federal student loan system or are in the process of doing so, and millions of borrowers the accounts have been transferred to different servicers. The Department of Education is providing automatic student loan forgiveness for thousands under new programs expansions. And if you are not tuned into your account, you might miss the information. So log into your student loan account, studentaid.gov, www.studentaid.gov, so that you can get into your account, see what's going on with it. And finally, don't ignore student loan forgiveness news. Pay attention. This will be the only time that I will tell you, one of the few times that I'll tell you to pay attention to the news. The Biden administration is enacting sweeping and temporary changes to the federal student loan forgiveness programs. So while some of these changes will be implemented automatically, there are some programs that might require you to take certain steps or specific steps to qualify, and there are deadlines. So make sure you pay attention to that. With that being said, we have one last question for Tanisha. Where did my question go? I have student loans. Will that be taken into account when I apply for a home loan?
Great question, Key. And so, yes, student loans will absolutely be taken into consideration when you're looking to qualify. In fact, they are and have been a major hurdle for people, especially with the higher balances. But there has been some changes recently that have made it a little bit easier for people to qualify for home loans that do have like a nice chunk of student loan debt. So the old rule used to be that we would have to take 1% of the balance of your student loan as a payment against your debt to income ratio. Right. So that would be like, let's say, you were in a forbearance or some sort of, you just didn't have to pay on them. This is like pre-pandemic. Right. And really even during that time too, because these changes are more recent, but let's say you didn't have to make a payment, right? Which is great for you, but we would still have to create a payment and hit that payment against your debt to income ratio. So if you're, a doctor or something like that, you got $100,000 in student loan debt, right? I'm hitting you for 1%, $1,000 that you don't even really pay. That could be tough. That $1,000 extra out every month from someone's paycheck is a lot of money, and that will absolutely affect your eligibility, right, to buy a home. But the rules had changed, and now we only have to hit you for 0.5% against your payment, which is better. I mean, it's definitely helped, right? $500 is better than $1,000 in a $100,000 scenario. Okay,
absolutely.
Yeah.
So I did see another question on here. I think it was about it says question for the future. My payments have been covered, but they are still reporting balance increases because my credit score to fluctuate causing the credit score to fluctuate 1 to 2 points. Who should I contact? Student loan, what is that? DTS. They have not been reporting anything for about, I think she was going to type in something else. Can you understand that question?
I would say if it's something having to do with your credit report, reporting, I mean, I might get with a credit counseling specialist to help navigate you with the best scenario for that. That would be my best advice. If it's about something that you're seeing, if your points are changing because of some inaccurate possible information, that's a credit person for sure.
Okay. Now with the seconds that, give everyone your contact information one more time.
Absolutely. You can reach me at area code 916-671-6299. Again, 916-671-6299. Or you can go to my website, TanishaBroadway.com.
Awesome. Ladies and gentlemen, there you have it. That is our guest, Miss Tanisha Broadway from Element Mortgage. Reach out to her. The programs that she talked about today are the ones that she has been using for years. They're working, they're tried, they're true, they're tested. And these are the types of programs that they've been in there for a while. The ones that are coming out, we're going to examine them. So stay tuned in right here. We're going to put them puppies under the microscope and see what kind of juice they really have.
Hey.
Y'all been listening to 97.5 FM. And I am Agent Key. And remember, if you are doing what you were created to do, I will see you at the top.
Bye.
Thank you, my dear. I appreciate you.
I appreciate you, darling. Anytime, every time.
I don't know who Facebook user is. It says, hey, the ladies. We appreciate that. And Miss Tia, is that your number there?
That she put my number out there. Thank you, Tia. Y'all write that down.
Write that number right there down. Okay, you are welcome, Miss Diane. You're welcome, Miss Tia. All right, everybody. I'm going to let you go, ma'am, and we will see you next time.
Bye, darling.
Bye-bye, my dear. Take care, everybody.